Hey, good morning, everybody. Thank you for taking the time to join live. And I appreciate you bearing with me last week as I kind of had to make an unexpected trip to Wichita with a youngster. I really appreciate Jeff stepping in. I thought he did a great job on really short notice for your first time. So thank you for bearing with us. So let's jump right into it. Lots of things going on, and there's lots of questions circulating, like how far can this thing go? Have we topped? What should we do? So my goal today is to kind of frame the issues, take a step back, and put it into a much longer term perspective, because what we're in the middle of is a very long term thing, and we're in something that's truly significant um, globally. Okay, let's kind of look at the big picture. We've got this huge bullish fundamental backdrop, right? We've got really strong demand. I mean, our demand is absolutely off the charts, and it just keeps getting stronger and stronger. This week we had two huge demand surprises on corn that really nobody saw coming. One was ADM announced that they sold 200 uh, million gallons of ethanol to China. Nobody saw that coming. And so that's 70 million bushels of corn that we sold that nobody knew about. China purchased another 1.5 million metric tons, which is their second largest purchase ever from us. And they did it yesterday, and they did it in the nearby at $5 corn. It's crazy that higher prices are actually drawing more demand. And why is that happening? Well, it's because all of the other supply globally has dried up. China doesn't have any supply. The Black Sea doesn't have any supply. South America doesn't have any supply. And South America's crops are growing. And guess what? Their crops aren't great. And just to maintain our current balance sheet, their crops have to come in big. And I'm talking both corn and beans. So in the last report, that the USDA decreased the 2020 corn crop by 3 bushels an acre, right? And then they also, to avoid the shock to the demand table, or to the supply and demand table, they also reduced demand. They lowered ethanol demand, and they lowered exports and feed. They lowered all this stuff, and it's just not real. So the USDA's got to reconcile that at some point in time, and I think they're kind of caught with their pants down, because they keep trying to manipulate the crop sizes and things, and it's just not working for them. So look around the globe at what's happening. You've got everybody flooding to us to buy stuff. You've got other countries putting export taxes on and restricting exports. You've got weather issues, and we're really the only game in town, and we're still undervalued relative to everyone else. You've got $11 plus corn in China. You got $25 beans. You got $6.50, $7 corn in South America. Black Sea is higher than we are, and we just continue to see higher prices outside the U.S. and more pushing more and more export demand to us. And so, and we don't really have the bushels, so we've got a ration, right? So the price just keeps going. Now, one thing that's been really mysterious to me is new crop. So all of the rally has been happening in the old crop, right? We've inverted this market something extreme. And so the new crop hasn't really engaged yet. I mean, we're talking new crop corn is at 450 this morning. New crop soybeans are at 1158 this morning. What I have on the screen in front of you is the new crop corn and bean spread. Where are we at? Well, if we have a situation where the bean carryout is, I mean, tight doesn't really describe it. Is it negative? It might be. I mean, we're talking 150 or under projected bean carryout for this year. Our corn carryout is collapsing quickly. I was talking to somebody earlier this week, and they said we have a 3 billion bushel carryout. I don't know what planet he's living on, because our carryout's like, I mean, it's closer to 1.2. A lot of people are starting to talk about under a sub billion bushel corn carryout this year. So this spread is, I don't know what's going to happen with it, but corn is really tight and potentially getting even tighter. So I think that new crop corn's got to come up and gain against soybeans so that we don't lose too many acres to beans. I mean, this is slightly favoring beans right now. If corn needs to step up, this spread will contract and corn will buy more acres, which might ignite beans because they can't afford to lose any acres. So I think that we're getting ready for an unprecedented acreage battle between corn and beans, and then wheat is like the stepchild that's caught in the middle of this custody battle for the acre, and has got to flip flop from house to house and fight to kind of fend for himself and fight for his own place. So we've got these underlying fundamentals that are frankly overwhelmingly bullish. And so we have a huge sell-off last Friday, right? And it scared the living piss out of everybody on that sell-off. And it certainly got everybody's attention. So the question was, why have we topped? Are we too much? Are the funds too long? You know, the China's Lunar New Year, the demand is going away. China is going to cancel shipments. You know, you got all this stuff, this negativity that creeped in, and boom, the market sold off. Well, I think that's going to become the norm, not the exception. We're going to have steep rallies, and we're going to have steep fall-offs as we kind of navigate what is potentially uncharted waters with a food shortage. You know, this isn't like 2008, 9, and 10 when we just increased ethanol and shocked the world with new demand. We're literally dealing with a shortage globally. So we have to ration and we have to buy acres. Okay, so with all of that backdrop, and I hope what I'm communicating is that there's some things happening fundamentally that are really, really compelling. And the only thing that's really going to step in and change that story is a supply that exceeds expectations. So these are futures markets, right? They're absorbing current information and they're discounting the probabilities of events in the future. That's their job, and that's what all these minds and traders are doing all over the planet. And so they're already discounting, you know, a 15.5 or 16 billion bushel corn crop in the U.S. They're discounting a 5 to 8 million acre bean increase. They're discounting all of that. It's already baked into this market, and it's not putting pressure on it. So I don't know where people are like, oh, this is going to be a V top and we're just going to come straight back down. Well, it's not going to happen. So what I want to show you is what's happening on the weekly charts, and I've got a really clean chart. You know, usually we have all these indicators on and all this stuff that gives us some clarity. It doesn't matter what this chart is. I don't care what it is. Pretend it's a chart of oil. I don't care what it is. It doesn't matter what the chart is. The analysis is the same regardless of what the chart is. And it doesn't matter if it's a 1 day, a 1 minute, or a weekly chart. The analysis is always the same. That's why we like technical analysis, because it provides some consistency. What I have in front of you is the weekly chart of corn, and I've got it zoomed in a little bit because I want to show you what's happening here. We've rallied from 307 all the way up. We're currently at 541. Last week, we had a limit down day on Friday. we locked limit for a few minutes and barely came up off the low. And last week was an inside week to the prior one. Think about that for a minute. We were locked limit down, and we had sold off for 2 days prior to that, and we never even challenged the prior week's low. Now this week, look what we did. We broke down. You see this little short line right in here on a candlestick chart, right? That's called the shadow. And then this full part is called the body. So we poked down, and now we've completely reversed. And this morning, we've now taken out the high of this prior week. So we have a bullish engulfing weekly bar developing before our eyes on the weekly chart. I don't care what time frame you're looking at. This is bullish. Typically, when you get a bar like this, you would expect at least 3 to 5 more bars to keep going, and you would expect that to maybe even increase in size. Now, it is only Wednesday, and this bar's not closed yet. So we could turn around and, we could close all the way down at 450 this week. But I don't think that's what the market's telling us. The bulls need fed, and they got a lot of food yesterday, with China making the purchases that it made. So if we close anywhere in this vicinity or even higher, that is incredibly, incredibly bullish. And I can't make this any more simple than that is not a formation that should be sold. Even a pullback down into this 515, 520 area, that should be bought without question, because the risk reward is just too much. So I'm going to add one really, really simple technical indicator to it. It's called a trend line. You all know what they look like. So let's keep this simple. We're in an uptrend. That trend is solid as can be, and we have a bullish engulfing weekly bar that's telling us that we might work higher. So what are the other markets doing? What are they telling us? Well, let's look at the bean market. We have the same setup. I mean, we've rallied a buck from Monday night, or from Sunday night, and we're on course to have a engulfing weekly bar on the beans as well. And wheat, well, wheat's not any worse off. Wheat is maybe the most volatile of everything, but we're on the verge of a weekly engulfing bar on that too. So we're really interested in how we close this week, because if we're closing up in the upper end of this range, then there's a very real possibility that these markets are just up and away into territory that we really haven't been in for a really long time. So I know it's hard to think that maybe we ought to be buying. Guys, we may be just beginning on this move, and it's going to have a lot of opportunity to buy weakness and buy strength. So we've been looking at this February, March, April timeframe as where that acreage battle was really going to take place, and kind of towards the end of that is where we want to start looking to market some new crop stuff. But I just don't see anything on any crop that would tell me to be on the sell side of it today, with anything. And so if you start looking at the dailies and the weeklies, you can get yourself kind of in a frenzy, because you can get conflicting signals, right? They get a lot more complicated the shorter the time frame, because the volatility is so high. So I think the simple way to put it is think about the weekly chart and think about that backdrop of fundamentals. The world is short food, and we've got to induce supply. Any weather hiccups that we have, and this thing is going to get insanely bullish. I don't think we've seen anything yet if we run into a weather problem in the U.S. If we're hot, dry, and under fertilized in come May and June, I don't know what's going to happen, but I think it's going to be completely crazy. So patience, patience, patience. On these charts, you know, I mean, look at this, right? We had this big sell-off on soybeans, and then we immediately turn around and before you could even get an order in, you're back up a buck, right? So it's extremely volatile, and you want to really pick your spots. So you know, we're watching this 1435 area really closely, and if we break above it and close, then we're going to extend this move on up, probably here even in the month of February, before we have another significant correction. There's a possibility that we could top right here and work lower, but I think that's got to be bought too, because if we're in a food shortage and we need to ration demand and we need to close exports, a dollar break in soybeans isn't going to help that situation. It's just going to make it worse. So I think that's got to get bought, if we are lucky enough to get it down here. So I'd rather buy the breakout to the upside and be patient kind of in this middle part, and buy weakness down into this 1250 area if we're lucky enough to get it, or buy the upside because you know, we don't know where the top is if it gets to the upside. So we're kind of in the danger zone in beans right in here. And this makes sense if you remember this chart. This is the bean corn spread. We're top heavy to beans. So beans should be a little bit more advanced in their rally. They should be a little bit weaker. And then we look at corn, and corn's just warming up. Corn is sorry, that's beans. I need to I was like, that's not what corn looks like. Hold on, where's my here's July corn. Hello chart. Yeah, July corn is more bullish. We're already breaking out to the upside. You know, 565, 580 is the first target on these charts. So the daily charts are definitely extended. They're definitely overbought, but look at it in context of what we're doing here, and you can't sell them. You gotta just stay in and keep going. All right, so I'm looking for corn to gain on beans. Definitely a new crop, because I think corn's got to take a stand and not lose acres, because our carryout's collapsing, not growing. Wheat is interesting too. The wheat carryout, everyone is really bearish wheat, and so it's getting a lot of volatility. And the reason is we have a huge carryout in it, right? We're oversupplied. I mean, the wheat stocks to use is like 40%. So compared to corn and beans, where we're 10 or less, 40%'s ample supplies. Why are we bullish wheat? Well, the reason is there's a couple reasons for it. Number one, it's the fact that the wheat carryout has actually been declining for 4 years in a row. And so we're already on a negative trend. We're losing acres. We're trying to cut supply there. So number two, you've got weather issues in the Black Sea, and you've got the Russia that is trying to discourage exports. You've got other countries across the world that are worried about food inflation, which is a wholly unrelated issue. That's currency related, not supply related. So they're buying wheat as a store against inflation and against a food shortage. So you got a double-edged demand sword coming from there. So the more buying that comes to the U.S., our carryout gets lower and lower. So then that puts our weather front and center, because we've got to have a really good crop just to maintain. Otherwise, our balance sheet gets really, really tight on wheat as well. So if those factors really unfold, then wheat can explode up out of here, and we can go to $8, $9 on wheat, especially if corn is higher. So we're up a couple bucks in wheat already from the low. I think that might just be the beginning if this bull market really gets going and we really do see the acreage battle coming in corn and beans. So we're bullish from here through May. We got to give it some room and see what we're going to do on the acreage side. Obviously, the market doesn't care what I think, but and I'm not saying we're not going to have some pretty wild ups and downs in the middle of there. But I think big picture, until we see some damage on the weekly charts and we start to really see some corrective patterns, we should be patient. But I want to leave you with that picture right there, because that's telling you just, I mean, that is bullish as can be, guys. There's nothing about this that's not bullish. So, and if I back it out, you know, it even gets more bullish above 450, because that's a big gap, right? We get above 450 and 650 is right around the corner, because we got to go close it. So be patient, and don't sit there and try to worry about every squiggle, because we just don't know we don't know how deep the pullbacks will be, but I think they're going to keep getting bought. All right, that is what I've got for you today. Appreciate you joining. Please call with questions. Please call and let us talk about it. But as new crop starts to rally, new crop will come up into these ranges, because I don't think it has a choice. That's my 2 cents. Have a great day, and we will talk to you next week.